Hello and welcome. It's time again for another weekly journey to the world of business across sub-Saharan Africa. You're watching Africa Business Weekly, so let's run through some of the most impactful business stories this week. I'm David Alabi. Now, from looking at Rwanda's roadmap to sustainable finance to peace and security forum in Dakar, Senegal, will start off this week's journey on Africa Business Weekly from South Africa.
Thanks, David. To start off with stories we covered in Southern Africa this week, we begin with Patty Fong, the Climate Program Director at Global Alliance, for their latest Future of Food report. It outlined climate concerns in the global food production arena. Here's more on that.
There are a number of sources for these emissions, and that finding you just said was really surprising for us. So, for example, that if you look go to the market and you buy kind of a cut of beef, well, rainforests might have been cut down in order to make room for cows to graze. And then the cows themselves are producing methane emissions. And then that beef might have been flown halfway around the world to get to the market for you to buy that beef. Another example is the production and the use of synthetic fertilizers. These are coming from fossil fuels, from petroleum. That's another huge source of emissions. And a third example is the amount of food that actually is sitting and decaying in our landfills. So 1/3 of all the food that is produced globally actually is not eaten. It goes into the landfill. It's lost or wasted. So these are just a few examples which really has been overlooked until now.
Yeah. So looking at the amount of funding, though, right now that has been allocated towards combating such practices, as it were, at 3%, why is it so low, particularly compared to other areas in which funding is going towards to try and reduce carbon emissions, areas like energy and transport? I mean, is it the fact that there's not enough to put more in food right now? Is it perhaps the lack of awareness of the fact that the food system is in need of transformation? Which is it in your view?
It is all of the above. To date, there's been much more attention around the emissions coming from fossil fuel production. Is probably an relatively easier sector to target in terms of there are clear technology solutions and transition pathways. Whereas when you're tackling food and land use, it's a lot more difficult to measure. There's also probably concerns by governments about being seen to tell people what to eat or how to change their diet, but we're not saying that everyone has to become vegetarian. For example, in Africa or parts of Africa where people don't have enough, actually eating meat is an important source of nutrition. But as a whole, we do need to eat less meat and dairy, and we need to farm in a more sustainable way that works with nature rather than against it. And we need to reduce food waste. So I think there is a kind of first lack of awareness, attention. There is kind of probably uncertainty of how to tackle it, and therefore how to translate that into their plans. So there are various policies governments have, whether dealing with health, dealing with agriculture, but they're not aligned with climate. So if governments start to align and prioritize food systems, which is not just about climate, but it's also about addressing biodiversity loss, it's also about protecting our health, that actually you can address all these things, but they need to be prioritized in national climate plans. And once they are, then you can unlock this source of financing from the public sector and from the private sector.
Still on this week's snapshot, we direct our coverage to Zimbabwe, where we asked our participants to weigh in on the currency crisis. CNBC Africa's Godfrey Mutizwa spoke to Batanai Matika, Head of Research at Morgan & Co., and Jewel Aita, Acting Director and Professor of School of Economics at UJ.
What we see as the big factor, I think we should clearly put this one out, is a confidence gap. I think there's a confidence gap within the economic agents. They're not really confident with the monetary policy itself and also the growth prospects. And that is why some of these measures that are being put in place are not really helping, in terms of boosting confidence in the local currency unit, which is the ZWL.
Yeah. So broadly, the question then that I'll come back to you, Batanai, is to what extent have those measures had an impact?
So we've seen a significant impact in terms of just the lack of ZWL liquidity. And even if you
look
look
at Zimbabwe dollar, right? Zimbabwe dollar liquidity.
Yes, Zimbabwe dollar liquidity. Yes. Yeah. So even if you measure trading activity, even on the Zimbabwe Stock Exchange, we've seen that trading volumes have come down quite significantly, simply because it's a ZWL market. But what that has caused also is a dollarization of the economy. So you find that economic agents are now just transacting in ESD simply because there's no ZWL liquidity. But also there are long-term effects that we see in the broader economy simply because there's no credit, and it will affect productivity, and also disposable incomes and consumption have actually come being impacted negatively. So we feel that the lack of ZWL liquidity will also affect growth prospects for the economy. We think the attention is just on the exchange rate and not on broader macroeconomic fundamentals.
Yeah. So our problem remains. So Joel, I want you to come in here. So earlier on in the year, I had an interview with Professor Steve Hanke. He is well known in currency matters, and one of the questions that I put to him was what his suggestions would be for trying to solve Zimbabwe's currency crisis. He suggested a currency board, and he had some other choice words on what should happen to the Zimbabwean government, which we are not going to repeat here. But I thought, let's go to the books and ask the question. When you have a situation like Zimbabwe has been grappling with for the past 2 decades or so, what do the books say?
Yeah, thank you very much. I must say that one of the challenges that is facing the Zimbabwean economy has been price and exchange rate instability. And I think what is currently happening in Zimbabwe, or has been happening in Zimbabwe, raise a very important question on whether Zimbabwe should consider alternative exchange rate regime. And I think we have seen there was a time when they abandoned it and dollarized completely and then brought it back. And we can see that there is a rising inflation rate of over 200%, and accompanied by higher interest rate. And yes, the suggestion of a currency board, that is one type of exchange rate regime that a country can choose. But then it has features where we say, when you are operating a currency board, it means that the domestic currency, or the issue of the domestic currency, should be backed by an anchor currency, meaning that Zimbabwe will need to select a country where it will peg its currency of that country. So, and I think that is normally determined by the direction of trade. The direction of trade will determine which country's currency will be used as an anchor currency for the Zimbabwean dollar.
That's all from me. Back to you, David.
We now move over to East Africa, and Fiona is standing by to take us through the stories that shaped headlines in East Africa this week.
Thanks, David. From East Africa this week, Kenya's president oversaw the swearing-in of a new set of cabinet ministers in the country's capital, Nairobi. And as the new cabinet settles into office, CNBC Africa had an exclusive interview with the outgoing Cabinet Secretary of Treasury and National Planning, Ambassador Ukuru Yatani, on the state of the economy, as well as the road ahead for the new Cabinet Secretary, Professor Njuguna Ndung'u.
I came to office close to 3 years ago, at a time when things started not working, going the right direction for the globe. You are aware the challenges, the onset of COVID, and the serious repercussion that is had on the economies. Later on now, we are being followed closely by hike in fuel prices. We have challenge in food prices. The international inflation is at its highest. Generally, at the domestic level, we have experienced one of the worst droughts in very many decades. We had election also. All this had an effect of distorting the normal life planning, generally, and as far as the economy is concerned. But I look back with a lot of nostalgic memories that we were able to navigate very difficult times, particularly COVID. We were able to maintain liquidity in the economy. We were able to cushion the vulnerable in society. We were able to support businesses. We were able to provide jobs and opportunities. We were able to put money, disposable income in the pockets of ordinary people. And through this, we were able to stabilize the economy. So we've also come up with a number of reforms, the financial sector, generally in the fiscal environment, as well as all the monetary situation. All these had an effect of positively supporting the economy. And I look back with a lot of pride that for the first time in more than a decade, we were able to register 7.5% of GDP growth, and parallel, under the very difficult circumstances. We're also able to generate enough local revenue to the extent that we've been able with a growth of more than 22%. We're also able to reduce budget deficit from a high figure of 8.3 per annum to 6.3, and progressively looking towards about less than 3% over a 3-year period. These are things that I look at with a lot of pride under a very difficult global environment. We've achieved so much by carrying out reforms. We've also improved our rating in as far as our relationship is concerned with multilateral, bilateral partners, and also to the extent we've been able to attract investors along the same. We've had a very good relationship with the IMF. On our own accord, we invited them to work out with us alongside a reform program where we are looking at the issue of managing debt vulnerability, while at the same time working on reforming the various state enterprises of this country that to some extent have had their own fair share of challenges, some induced by external environment, some induced by lack of proper governance. So these are things that I look back and pride myself as having championed the economy in a very difficult global environment.
Thank you, Mr. Minister. And I'd like to pick up on that topic you've just covered and around IMF. One of the major reforms we've seen the Kenya government take on is to scrap the fuel subsidy, which was one of the conditionalities from the IMF. And of course, this has left consumers in a rather awkward position, even as inflation pressures continue to ravage a number of economies in East Africa. What would be your take on this issue around the IMF conditionalities that came up with Kenya's ongoing program?
Well, I want to clearly state that the reform program that we are currently implementing with the IMF are not about conditionalities. These are, we sit and agree on targets to achieve over a period of time, and is a disbursing program, and whatever position that we agree, we either don't enforce on them, or they also don't enforce on us. It's a mutually agreed position, because we believe that reforms can only work if they are domesticated, if they are owned by the users for their betterment and also for their prosperity.
In a bid to attract and scale more sustainable finance, Rwanda International Financial Center has unveiled a Rwanda Sustainable Finance Roadmap that seeks to attract more investors who invest sustainably. For more, CNBC Africa's Julius Bizimungu spoke to Nick Barije, the CEO of the Rwanda Finance Limited.
This roadmap for Kigali International Financial Center is very important because it looks at 3 pillars. One, how do we attract sustainable finance focused investors? How do we put in place the infrastructure required to attract that? And that speaks to issues around taxonomy. And 3, how do we build skills and competences around sustainable finance or ESG investing? So it's to be able to attract the investments. One, you need to have the infrastructure in place. You need to have the skills, and then you need to attract the capital. So it speaks to those 3 key pillars.
Right.
And that's why it's very important and timely.
Right. Obviously, Rwanda has been hailed as one of the countries that have, championed the transition towards green, agenda or green economy in specific. But in terms of the gaps that we're seeing, you talked about the fact that there are gaps within the ESG scores, for instance. What are these gaps in Rwanda?
Number one is skills available, limited skills of people who have the knowledge, the experience around ESG investing across different sub-sectors of our financial sector, be it banking, be it insurance, be it capital markets. We see that gap. So it's a gap that we need to respond to. Two, it's around a focus around ESG investing, meaning how do we green banking lending? How do we green our stock market? How do we green other investment structures such as funds that are being used? So those are the two immediate gaps that we see within our financial sector and that we want to respond to.
And then, Nick, you are very specific when it comes to what you want to achieve. For instance, you say you want to, you will have financial instruments that will help you to achieve these ambitions. Give us an understanding, for instance, of what kind of financial instruments do you want to develop to be able to attract, for instance, private equity and venture capital?
Let's take the most recent example. African Development Bank has set up a pharmaceutical foundation in Rwanda. That has happened. So when now we talk about financial instruments, that has happened, one, because we have a foundations law. So to be able to set up that foundation, you need to have a legal instrument that enables you to be able to do that. Two, when you talk about investment instruments, we have a tax regime that defines how a foundation is going to be taxed. So that's what we mean when we're saying we need to create investment structures, investment instruments, and an enabling environment to attract sustainable finance focused investors.
These are some of the unique stories coming in from East Africa this week.
Thank you so much, Fiona. Now, from West Africa this week, African leaders at the Dakar International Forum on Peace and Security want to see more coordinated response as they urge regional and continental partners to develop localized solutions that are peculiar to the African context. That's according to the president of ECOWAS Commission, and CNBC Africa's Kenneth Igbomo caught up with him on the sidelines of the forum in Dakar.
The theme of the event, peace and security in Africa, is apt, relevant, and I think it is also timely that we are mainstreaming this issue in our debate in the public space. I think those who have decided to take it as the main theme have made a good decision.
Because we're at a time where first we're just coming off a global crisis, and now we're seeing multifaceted crisis playing out here. We're talking about the Russia-Ukraine crisis snowballing into many other mini crises like the energy crisis and all. But then as a continent, we have huge development needs, and peace and security are very vital to the existence of the continent. And I'd like to speak to you to get your thoughts on how you think as a continent we should speak with one voice in addressing these key issues.
Well, first, I don't think we are coming out of any global crisis. I mean, we are faced with crisis. That is for sure. Now, Africa's response should be coordinated, and it has been coordinated. I mean, through our regional organizations as well as our continental organization, the African Union. So what we're trying to do is that our partnership or our partnerships should revolve around those coordinated, localized solutions that we have developed ourselves. We feel, in as much as we appreciate the work of our partners, we want our continent to take leadership role in finding solutions to our own problems, and partnerships should be built around those solutions. I think what we should avoid at all costs is these fragmented initiatives, which are difficult to coordinate, manage, and might end up just distracting us. So we feel Africa's solution should be given priority, and we appeal to all our partners to really work around those solutions.
Because you make a very fair point there, talking about how we should manage our partnerships at a time like this. But then when in a fragmented world right now, we're talking about part of the West going against the other part of the West, and Africa needs all its development partners. And I'm trying to wonder how you think we should approach this in terms of the Russia and the West.
Listen, I think Africa's interest is very clear. Africa's priorities are very clear. And our partners are chosen, and the partnerships are developed on the basis of those interests. And I think our African leaders have been very clear. They've identified and they have insisted that we will make sure our interest comes first. So the matter is very clear. We don't want to be really put on one side against the other. What we wanted to work on is Africa's, to promote Africa's interests, and that is our main priority.
But listening to all the conversations that have played out here, we saw some presidents give their take on the situations that played out here today. What has been that biggest takeaway from you?
Well, I mean, the president of Senegal was extremely very clear. He did indicate the importance, as I've just said, the importance of Africa taking leadership and the geopolitical reality or geopolitical situation being addressed to reflect the current reality. The United Nations, for example, President Sall spoke extensively about the needs to reform the United Nations. What he said is the UN was established after the war to respond to the realities of the time. The realities of the time allowed for permanent seats to be held by certain countries. Now we have more countries that have gained independence 70 years down the road, 60 years down the road. It is no longer the same reality. So the institution needs to reflect the current reality. So that is one thing we need to, a major takeaway from here. The second thing is Africa's localized solutions should be given priority, and then funding. Support should come around those realities, particularly funding. The example he gave, instead of giving $5 billion to an institution, give Africa $1 billion and to support their own initiatives and see what can be done.
Meanwhile, queues continue to linger at petrol stations in Lagos and other cities in Nigeria despite the assurances given by oil marketers and regulators. A litre of petrol currently sells for as high as 200 naira. Meanwhile, the Nigerian Upstream Petroleum Regulatory Commission says about 1.2 million barrels of crude oil is also consistently shut in by producers across various oil wells in the Niger Delta region due to the incessant oil theft in the industry. Kola Karim, Chief Executive Officer of Shoreline Group, shares his thoughts on this.
There is disruption in the global supply chain, period. The problem in Russia and Ukraine is a big contributor to this because most of the refined products is coming from that part of the world to Nigeria for the type of gasoline and spec of gasoline that we sell. The other big problem is foreign exchange. Think about it. Nigeria, the only importer of petroleum products into Nigeria is NNPC. And if NNPC is the only importer, that means all the major marketers distributing is dependent on NNPC providing the backstop of fuel supply for them to sell. And if there's any disruption to NNPC's ability to either get in the supply in, then there is going to be disruption across the value chain. And that is what you're seeing across board. Hopefully that would ease itself soon, but it's all dependent on factors of being able to access dollars to buy the product or crude oil for the swaps that they're doing, the DSDP program to support that as well. So these are all the contributory factors to it. Remember, Nigeria suffered the last 2 to 3 months in availability of crude oil, and that is what they've always used, either to get dollars or crude oil availability to swap for the products that needs to be sold into the market.
How concerned should we be about this? Because you've mentioned a couple of factors that are sort of not within our control, especially the crude aspect. We know that the theft is persisting. We've thrown everything that we have at this problem. It doesn't appear to be abating. But the NNPC has assured Nigerians that it has enough stock, stored. We need not worry. But those other issues, FX, crude, international disruptions, those are things that the NNPC has no control over. So how concerned should we be about those other factors?
Look, like I always say, as with everything to do with energy security, we should all be concerned, because everything, the world, globalization and the world is so integrated today. Whatever affects the other person, we should expect it to affect us, just like COVID. So I always put it to bear that Nigerians must be aware that whatever affects anyone, anywhere, would affect us. And this is what we're seeing. Look, it is outside NNPC's control what happens with the refiners that's outside Nigeria till Nigeria refines its own crude to supply its own market. So the Dangote refinery coming on stream, or the repairs of the Nigerian refineries like Port Harcourt refinery coming on stream, is important to providing that succor to the market. That's one. The second one, and very, very important for two things: foreign exchange earning to Nigeria, and also provision of that crude supply for NNPC to support its GSDP programs. That is, if production is affected like we have seen the last 3 months, this is bound to happen. So the oil theft or the disruptions and shut-ins in the Delta from the east to the west also will provide a big uplift if this is elevated, but there's good news.
And this brings us to the end of Africa Business Weekly for this week. I'm David Alabi, and we'll definitely be back same time next week for more weekly business stories across sub-Saharan Africa. Thanks for watching.